Hello everyone, this is Tejaswini, and in today's class, let's discuss about the question number 8 of Test Your Knowledge question from the chapter Computation of the Total Income and the Tax Liability Direct Tax. Okay, fine. Now, with regarding to this question number 8, this fellow Mr. Y carries on his own business and trading and profit and loss account information is provided. This they have not given as like the other questions, like of the previous questions which we have seen. The previous question, if you want this Miss Povi question, this question is already been uploaded in my channel. You can go and watch this. See here, they have given in a format, that is income and expenditure account and P&L account. This would be provided in a format and following adjustment would be given. This question is little bit different, wherein they have provided the information net profit all in the form of sentence form they have provided. The question is, believe me, it's simple. Okay, the net profit was 11 lakh 20,000. The following incomes were credited in the profit and loss account. All these three information is credited, means this has been credited in the P&L account, but income from UTI, interest on debentures, winning from horse races is taxable under different head. That is, all these three are taxable under the head income from other sources, right? But they have taxed it under your PGPP. So this income from UTI, interest on debentures, winning from horse races, it is taxable under the head income from other sources, not taxable under the head PGPP. But this has already been credited to P&L. So what we will do is that income, if you have credited in the P&L account, what will happen to your profit? Profit also increases. If income increases, profit increases. Now I have to give the reverse effect. That is, I have to decrease the income. If I have to decrease the income decrease, profit would also be decreased. Clear? So now can I say if the income decreases, profit also decreases. That is income from UTI, this debentures and horse race, this would be subtracted from your PGPP, and from PGPP you are going to subtract it, but you are going to add this in your income from other sources. And they've given gross figures over here, so we'll consider the gross portion only. Great. It was found that some stocks were omitted to be recorded. Can I say omitted to be recorded means they forgot to record? If they forgot, my stocks would have been undervalued. My closing stock and opening stock is undervalued. Because of my opening stock is undervalued, my profit would be overvalued. People, you want more clarification on this one? You can go and watch the PGBP computation points which I have already recorded, or the revision videos which is there in the PGBP for more understanding of this, how income increase, profit increase, all this would be effective. Okay. Great. If the opening stock is decreased, my profit would be increased. In order to rectify the effect, I have to give the reverse point, right? If it is omitted to be recorded, means they have forgot to record. Now, if the opening stock is decreased, now I have to give the proper effect. That is, I have to increase the opening stock. If I have to increase the opening stock, my profit would be decreased. Clear? And closing stock, if the closing stock is decreased, my profit would also be decreased. And if the closing stock is, that is, if I have to rectify the effect, yeah, that is, I need to increase the closing stock. If I need to increase the closing stock, the effect that I will give in my profit is add. In my PGBP, I am going to subtract my closing stock, add my opening stock. Clear? Great. 1 lakh was debited in the profit and loss account being contributed to a university approved notified under section 35(1)(2). All of us know whatever the contribution which you are making to a university which is approved by 31(2), 100% of such amount is allowed as deduction. Clear? 100% of such amount is allowed as deduction. Salary includes 20,000 paid to his brother, which is unreasonable to the extent of 2,500. Now, wait. It is already debited in the P&L account. No? So, if it is already debited in the P&L account and the effect is allowed as per PGPP also, allowed as per your P&L account also, will you give any effect? Absolutely no. When will you actually give effect? Allowed over there, not allowed here. Allowed, not allowed under P&L account, but allowed as per your PGBP. Only this is the case you are going to provide, that is you are going to give the effect. Allowed as per P&L and allowed as per PGBP also. And you have already given the internal effect. You have already given the effect, hence you are not going to give the further effect. Okay, great. Salary includes 20,000 paid to his brother, which is unreasonable to the extent of 2,500. So what is it? Salary includes 20,000 paid to his brother, which is unreasonable under section 40A2. You guys remember? Under section 40A2, if it is unreasonable, that is excess of fair market value would be considered as disallowed, expenses disallowed. So what you would do, if it is unreasonable to the extent of 2500, I'm going to add back this 2500. Clear? Advertisement expenses include 15 gift packets of dry fruits costing 1000 per packet presented to important customers. Tell me, people, if it was presented to their family members, then these expenses would have been disallowed. For advertisement expenses, you have provided it to important customer, that is, you have given it at the cost of, that is, you have given it for the purpose of business. Allowed there as per P&L, allowed as per PGPP also. Will you give any further effect, people? No, you will not give any further effect. You will not at all give any effect. That is, it's just that nil, no effect at all. Nil. You will not give any effect. Clear? Total expenses of car is 78. The car was used for both business and personal purpose. 3/4 is the business purpose, means 1/4 is personal purpose. If it is personal purpose, you are going to disallow. If it is disallowed, 78,000 multiplied by 1 by 4, whatever the amount you get, you are going to add it to your PGPP. Clear? Miscellaneous expenses include 30,000 paid to A and Co, a goods transport operator in cash on 31/1/2024 for distribution of the company's products to the warehouses. Miscellaneous expenses include how much? 30,000, which is paid to A and Co, a goods transport company in cash. In cash. They are paid in cash how much? 30,000 to goods transport company. First of all, as per section 40A3, expenditure, cash expenditure which you are making, cash payment which you are making in excess of 10,000 rupees shall be disallowed. But if it is disallowed, what is it going to be? 30,000. Miscellaneous expenses included 30,000 paid to A and Co. 30,000 excess of 10,000. But wait, the limit of 10,000 would be increased to 35,000 in case of you making any payment to a goods transport operator. So 35,000 is the limit for goods transport operator. How much you have paid in cash for one person per day? 30,000. Is it within the limit? Absolutely yes. Suppose in the place of this, it is some printing and stationery expenses which is paid. It is some salary amount which is being paid. That is 30,000. Then it would have been disallowed. 35,000 is the limit for the goods transport agency in case of 40A3. Clear? Great. Depreciation debited in the books was 55,000. Depreciation allowed as per income tax rules 1962 was 50,000. If depreciation is debited as per in the books is, depreciation debited in the books is, that is as per your books of accounts, as per your P&L, Companies Act, whatever it is. As per your books of accounts, it's 50,000, 55,000. That is not going to be allowed. That is disallowed. But is it depreciation as per the income tax rules allowed? Absolutely yes. So we are going to add this 55,000 to PGBP and minus this 50,000 as per income tax rules, as per income tax act, which is absolutely allowed. Clear? Drawings of 10,000 rupees debited in the books. Drawings of how much? Drawings of 10,000 which is debited in the books. What does it mean by 10,000 drawings of 10,000 debited in the books? That is minus of the drawings whatever is being done. In the books, they have subtracted drawings, but drawings is personal in nature, no? They have considered it as an expenses. Now, this is going to be disallowed because it is personal in nature, it is disallowed. You're going to add this in PGBP. Investments in this National Savings Certificate, 15,000 debited in the books. It is going to be disallowed under PGBP. Disallowed under your PGBP, but it is going to be allowed as deduction under section 80C. Add that in your PGBP minus that from your ATC. Now compute the total income of Mr. Y for the assessment year 24-25 under the optional tax regime. Clear? So if you can see, net profit as per P&L is provided. Salary paid to brother, which is coming under 2,500, that is 48 to disallowance. Motor car to the extent of personal in nature, 1 by 4, 19,500 is added back. Depreciation as per P&L. Drawings is not allowable since it is personal in nature, 10,000. Investments in the National Savings Certificate, which is allowed as ATC deduction. Undervaluation of opening stock or undervaluation of the closing stock. See, closing stock is added, opening stock is subtracted. That is what we have done. Clear? Contribution to the university approved minus. Income from the Unit Trust of India, that is also minus. Interest on debentures. Winnings from horse races. Depreciation as per income tax. The total sum would sum up to your PGBP 11,21,500. Okay. PGBP income we got. But here, these three expenses has been considered not as income under PGBP but as income under income from other sources. So what you would do? A dividend from UTI, interest on debentures, that and winnings from races, that is horse races. You are going to take that considered as income. Total GTI you got. Deduction under section 80C also you got 15,000. Total income 11 lakh 61,000 is what you got. Clear? 11 lakh 61,000 total income. You got the total income. Clear? I hope this is very clear. The next question, Mr. Rajiv, question number 10 of your test your knowledge. Age 50 years, a resident individual and a practicing chartered accountant furnishes you the receipts and the payments account. See, this question is bit different. Okay, wherein in so many, that is as of now, you have looked into the question wherein P&L information or income and expenditure information was given, but in this question they have given you receipts and payments account information. Okay, this receipts and payments account, opening balance of the information they have given, fees from professional services they have given, motor vehicle information they have given, that is motor car loan from Canara Bank information given. Always remember this is receipts and payments. These are, this is not income and expenditure people, this is receipts and payments. If you have studied in your foundation or in your PUC or in your intermediate or PUC, you might have studied about NPO wherein you have basically receipts and payments account and you have income and expenditure account. Income and expenditure would give you surplus or deficit position like profit or loss as per P&L. Receipts and payments account, always remember this is nothing but your bank account just given the name as receipts and payments. So bank account will have all the receipts recorded in your debit side, all the payments recorded in your credit side. This is just the resemblance of bank account. Now you guys tell me in your bank account when you are making the payment to a vendor, that is, let's consider for printing and stationery you have made some 200 rupees payment. You'll pay through bank. That's your revenue expenses, right? Suppose if you're making the payment of your some you're buying an asset. Now that asset buying, now that asset purchase has led you to make the payment of, let's consider 10 lakh. Will the bank say that no, it is your asset payment, I'm not going to make such payment? No, bank will not give all such reasons. Bank will just say, okay, you are making the payment of 10 lakh, you make the payment of 10 lakh. So all the capital expenditure, revenue expenditure, both the expenditure, capital and revenue, both the expenditures are recorded or considered under your receipts and bank account. So this is nothing but your bank account. So can I say whatever the loan taken, loan given, whatever the cash balance, everything will be reflected in your receipts and payments. Opening balance of receipts and payments will always be the opening balance of the cash or bank balance. The closing balance would always represent the opening or the, that is the closing balance of the cash or bank. Yeah. Now you need to identify, there is no profit and loss position given in the question for you to do net profit plus do all the disallowance and then give the allowance, nothing like that. What you need to do is very simple. You directly need to compute how much is your income, how much is your allowable expenses. People, we were doing net profit plus the expenses disallowed because it was allowed as per P&L account and it is not allowed as per PGBP. That is the reason we were disallowing it. In this situation, there is no such headache only. You will directly record your fees from professional services and you are going to do the plus or minus of whatever expenses is allowed and whatever income should be added. Clear? Now, you can see over here, opening balance of cash balance, that is irrelevant for PGBP. Fees for professional services, what you are going to do, this will be a starting point for you to do the solution. Rent, this will be your coming under PGBP. This rent will be coming from income from house property. Remember, there is no such concept of you adding back the house property income and then minusing it. Nothing like that. Subtracting from your PGBP, then going and putting it under house property, nothing like such. In PGBP, directly you're showing it this as income, and directly in your income from house property, you're showing this as your income. Clear? Now, motor car loan from the Canara Bank at 9% per annum. Motor car loan at the Canara Bank 9% per annum. This car loan they have given. You have received the money that has come into your bank account receipt. Is this part of your PGBP? No, this is not going to be a part of your PGBP because it is not your income. So motor car loan, let's look into the expenses part later. Okay. Salary and staff, is it going to be allowed? Staff salary, bonus, and the stipend to article clerk. Yes, it is allowed. Administrative, it is allowed. Yes, it is allowed. Office rent allowed. Yes, allowed. And there are many other points which is given. We will look into the adjustment part, and then we will make a further discussion of this point. We'll come back to this point after making the further discussion of the additional information. This fellow, he occupies 50% of his building for own residence and let out the balance for residential use at a monthly rent of 5,000. The building was constructed during the year 97-98 when the housing loan was taken. But you guys tell me, he occupies 50% of the building for own residence, so it is SOP, and let out 50% for monthly rent. So this is LOP. For 5,000 rupees per month, 5,000 into 12 months, we are going to do 60,000 we'll get. The building was constructed during 97-98 when the housing loan was taken. Now, think of income from house property situation wherein you will be able to take the expenses, housing loan expenses as your, that is interest paid on the housing loan. You will get under SOP if you satisfy three conditions. What are those? That is, the maximum will be 2 lakh if you satisfy three conditions. One is the loan should be taken on or after 1/4/1999. Loan should be taken for the purpose of acquisition or construction. Next, the loan that the property should be should be completed within 5 years from the end of the financial year in which you borrow the loan. All the three conditions satisfied, you will get 2 lakh as the limit. If any one condition not satisfied, you will get 30,000 as the limit. Okay, let's see. Is there any housing loan given in the question, people? My dear people, yes, absolutely yes. Housing loan repaid to SBI includes interest. So, under section 24P, under your income from house property situation, interest of 88,000 is there. Out of this 88,000, 50% belongs to SOP, 50% belongs to LOP. So, 44,000 for SOP and 44,000 for LOP. Clear? Now, if I'm speaking about 44,000 of SOP, 44,000 of SOP and 44,000 of LOP. So, now with regarding to this SOP, 44,000 of SOP property, whatever you could see. Now, you guys tell me, how much is that going to be allowed under SOP? LOP 44, entire 44,000 is allowed. Correct. What about LOP? What about SOP? SOP only 30,000 of the interest is allowed because it has not satisfied all the three conditions. Loan is taken on or after 1999. That is, construction was completed after 1999, 97, 98. The housing loan was taken. So, one condition not satisfied, maximum deduction that you can take is 30,000 in case of SOP. Done? Great. Motor car was put to use for both official and personal. Very well. 1/5 of the motor car is for personal use. So, whatever motor car interest paid amount is there, out of that, you have to consider 4/5 only as the business purpose and allowed as PGPP expenses. And this you should not at all consider because you are directly going to do the front calculation, not backward calculation. Right? So, no car loan interest was paid during the year. The written down value of the assets as on 1/4/2023 was given below. Furnitures and fittings, plant and machinery, air conditioner, photocopiers, etc. Computers. That is, they have given the written down value, opening balance of the information they have given. And this fellow follows cash system of accounting. And we should do as per the normal regime. Clear? Now let's come back to the point. Is this staff paid allowed? Yes. Minus. You will do the minus of this. You will do the minus of this also. This will come under SOP under 44. Whatever 1,88,000 minus this 88,000, you will get 1 lakh. This is allowed as ATC deduction. Housing loan repaid, repayment of housing loan. It is covered, getting covered under ATC. Life insurance premium is 10% of the sum assured. ATC ATC is going to be how much? ATC, that is life insurance premium of 10% of the sum assured. 10% of the sum assured, this will also come under people ATC. 10% of the sum assured is 84. So it's totally allowed. ATC deduction you will get. Motor car acquired in Jan by account pay check. That is, the payment that you have made is 4,24,000. They have given the asset. We have to calculate the depreciation for this one. We will do the depreciation calculation. Mediclaim insurance for self-wife paid is 18,000. This is allowed under ATD. Book bought under this annual publication. This you have to calculate depreciation. This you have to calculate depreciation. Domestic drawings is not allowed. Public Provident Fund again comes under ATC. Motor car maintenance 4/5 is going to be allowed as the business purpose. and closing balance, that is irrelevant. Clear? So whatever we saw, we'll just look into the solution. I told you, under SOP properties, maximum allowed is only 30,000. I've given the explanation. So loss from house property is 30. LOP is going to be so much. If you need the material of whatever I have written over here for this, whatever you could see, and whatever material which I have recorded in my YouTube channel, everything is available in the Telegram channel. So if you want the notes, if you want free resources, if you want the updates, so then you can join my Telegram channel. The link will be provided in the description. Okay. And with regarding to the questions, the timestamps will also be provided. You can watch as per your convenience. Now, LOP, annual value is provided. That is 5,000 multiplied by 12. 5,000 multiplied by 12 would be 60,000. That is deduction under section 24. 24A, standard deduction at the rate of 30% of NAV, 18,000. 24B, interest on borrowed capital, 88,000 multiplied 50%, that is going to be 44,000. However, under LOP, you don't have any restrictions either under 115 BSE or under your normal provisions. You don't have any restrictions for the interest on the borrowed capital of LOP. So it is going to be so much. You'll do the math and then you will get 32,000 loss of house property. When it comes to PGBP, fees from profession, you consider all these are the expenses which is allowed. That is motor car expenses to the extent of business purpose only, not for personal purpose. Car interest loan. See here people, here interestingly they have given cash system of accounting and here in the bracket they have given that is motor car loan. No car loan interest was paid during the year. As is following the cash system of accounting, what is actually paid, what is actually received, only those are considered. If he has actually paid, actually received, only then that is considered as your expense or income. What if that fellow has not paid or not, that fellow is not received? That is not at all going to be considered as your income or expenses. So in this case, as car loan is not paid, we are not going to consider it as my expenses. Done? Great. Now, depreciation. The depreciation, we have the calculation that is motor car is been bought. So, motor car is been bought on what date, people? They have given the date also. The motor car was acquired in Jan 2024. Tell me, is it used for a period more than 180 or less than 180? Obvious, it is less than 180. If it is less than 180, 50% of the allowable rate of depreciation would be considered. This motor car, 4,25,000 multiplied by 50% into 4 by 5, 25,500. Clear? Books being the annual publications at the rate of 40%. That is books provided in the question. We have considered furnitures and fittings. Opening balance they have considered. Plant and machinery also considered. Computers also considered. That is opening balance information done. Computer, new computer which has been purchased and the date of the purchase of this new computer is 1/11/2023, where the usage period, that is the used material has been put to use. The asset has been put to use for a period less than 180 days. 50% of the allowable rate of depreciation. Here provided the total depreciation as per income tax is 77,500. So you got total PGBP and you have no other income which is record. We have house property and you have PGBP. No other income apart from these two. You have GTI coming up. And what is the deduction which is available? Housing loan repayment 1 lakh, 1 lakh rupees. How did you get 1 lakh? 1,88,000 minus 88,000, you would get 1 lakh. Clear? So, public, that is PPF subscriptions, again 20,000 rupees. Life insurance premium, 24,000. Deduction under section 80D would be medical insurance premium, which is 18,000, and medical insurance premium is allowed. The total income is given in the question. Clear? With this point, clear? Good. The next question, question number 11. From the following details, compute the total income and the tax liability for the person who's age 31 of Delhi, both as per 115 BAC normal provision. Okay, whether he should opt for 115 BAC, we should advise. So we need to do both. We need to do as per 115 BAC also. We need to do as per the normal provisions also. That is what information has been given in the question is that salary including DA is provided. Bonus information is given in the question. Salary of rent provided by the employer, rent paid by Siddhant for his accommodation, bill paid by the employer of gas, electricity, water provided free of cost to the at the above flat. Siddhant purchased a flat in a cooperative housing society in Delhi for 4,75,000, which was financed by him from LIC, 1,16,000 at 15% interest. In his own savings, 65,000 and a deposit from a nationalized bank, 2,50,000. To whom this flat was given on lease for 10 years. The rent payable by the bank was 3,53,500 per month. The following particulars are relevant. Municipal taxes paid by Mr. Siddhant, 4 lakh, that is 4,300 per annum. Housing insurance 8,860. He earned rupees 2,700 in share speculation business. So the municipal taxes information is given. Housing insurance somewhat is given. 2,700 in share speculation business and lost 4,200 in cotton speculation business. In the year 2020-21, he had gifted 30,000 to his wife, 20,000 to his son, who was age 11. The gifted amounts were advanced to Mr. Rajesh, who was paying 19% per annum. Siddhant received a gift of 30,000 from four friends. He contributed 15,000 to PPF. What they have asked, that they have asked to advise. That is, we have to do as per both 115 BAC also, and we have to do as per the normal provisions also. See here, the salary information is given in the question, that is salary including DA is 4,35,000. What are you going to do? You are going to add that in your income from the head salary. Bonus, what you are going to do? Add the income. First, I will speak about 115 BAC and then we will discuss about on the normal provisions. Yeah. So, salary of the servant provided by the employer is 12,000, and rent paid by the Siddhant for his accommodation is 49,600. And you can see, observe over here, people, salary of this salary of the servant provided by the employer, 12,000 rupees. Remember, if anything which is provided by the employer, specified employees, that is certain services, 5 list of services provided under 17.3 clause 3, you can see over there. Salary of servant which has been provided by the employer, housekeeping services given by the employer, that is appointed by the employer. In that case, if it is given for specified employees, it is going to be fully taxable. Specified employees covers direct, that is directors, the people who are having control over the organization having certain greater percentage, and the people who are having salary of more than 50,000 rupees per, that is 15,000 rupees. In this case, all the three, one point is satisfied, that is your salary is more than 50,000. You become specified employee. So your salary to staff becomes taxable. Salary of servant becomes taxable. Clear? As this fellow is already owning a house, that is owning a house in Delhi. Where does he stay? He works in Delhi as well. As he's already owning a house, he is not eligible for the HRA exemption or anything as such. So rent paid is nowhere considered. You can't take even 80 double G in case of your rent paid. First of all, you don't have HRA to claim HRA exemption. It is not RFA, but you could have claimed 80 double G if it was you have paid rent, provided you had no other house, no other own occupation of the house. You already have a flat. So this 80G is not available. 80GG is not available for you. Bill paid for by employer for gas, electricity, if same thing. If it is provided to specified employees, it is going to be fully taxable. So it is going to be considered as perquisite. This we are not going to do anything. No effect. Clear? This is no effect. Then now, the Siddhant purchased a flat in Cooperative Housing Society in Delhi for 4,75,000 in April 2016, which was financed by a loan from Life Insurance Corporation of India, 1,68,000 at 15% interest. Is paying interest at the rate of 15% and his own savings of 65,000 and a deposit from a nationalized bank, 2,50,000, to whom this flat was given on lease for 10 years. Rent which was payable by the bank, rent was given at the rate of 3,500 per month. Municipal taxes paid information given. House insurance given. House insurance is, however, not allowed because in case of your house property, in case of your income from house property, 3,000 multiplied by 12, you will get the answer. Municipal tax paid, however, it is allowed. And deduction of 30, that is for 20, section 24A, 30% of your NAV is allowed. 24B, interest on loan is considered. That is 1,60,000 multiplied by 15% is the interest which is provided per annum. No, people, where is it? 15% per annum, 1,60,000. So the entire amount is allowed as deduction. So the final amount which you got is your income from house property. See here, salary income 4,35,000, bonus added, perquisite added, gross salary. However, even in the case of 115 BAC, you will not be getting any sort of you will not be getting any sort of deduction under Chapter 6A apart from those three which we have already discussed. But will you be getting 50,000? Absolutely yes. Remember this point. 50,000 standard deduction under Section 16 clause IA, you are going to get the entire 50,000 rupees as deduction. 115 BSc also it's available. Normal provision also it's available. Clear? This becomes income from house property. Clear? Now, the information they have given, that is 2,700 in case of share speculation business. Profit you earned and lost 4,200 from speculation, not a speculation business. Under your set off and carry forward provisions, can you set off the one speculation business loss against the other speculation business income? Yes, absolutely. Yes, you can do. So, can I set off 2,700 against this 4,200? Yes, you can. So, how you will do? 2,700 is the income. 2,700 to that extent you will set off. Remaining 1,500, that is 4,200 minus 2,700. 1,500 from cotton speculation business will be carried forwarded to the next year, as it cannot be set it off against any other income apart from this. Clear? Now, in the year 2021-22, he had gifted 30,000 to his wife, 20,000 to his son, age 11. See, the gift amounts were advanced and he was paying interest at the rate of 19,000. The income which is accrued. See, you have given some asset. Cash is also an asset. You have given your asset to your spouse and children. They are getting income. The income generated by the from the asset which has been transferred. It is taxable in the hands of the transferor. So, this fellow, that is Siddhant's wife getting this 19% interest, Siddhant's son getting this 19% interest will be taxable in the hands of the transferor. However, this fellow has a son who is a minor aged below 18. So, he will be getting 1,500 as the exemption under section 64 1A, but only under 100 but only under normal provisions, but not under your 150 BAC. So, whatever the amount, that is 30,000 multiplied by 19%, 20,000 multiplied by 19% will be taxable in the hands of the Siddhant transfer. Siddhant received a gift of 30,000 from 4 friends. People think the gift provision, section 56, clause 2, section 56, subsection 2, clause 10. What does this gift provision states? The gift provision states if you are receiving gift in excess of 50,000 rupees, then it is going to be fully taxable. Less than that, fully exempt. From each friend, I'm receiving 30,000 people. So, total gift which I've received is 30,000 multiplied by 4, which is going to be 1,20,000. Correct? 1,20,000 is more than 50,000 total which I've received. No, it is not 50,000 received from per person. It is 50,000 which I've received in total. So, 30,000 multiplied by 4, 1,20,000. He contributed 50,000 to the public, that is PPF. This is going to be considered under ATC only in case of normal provision, not under your 115 BSc. Under your 115 BSc, we have seen these 2 points. This point is also done. Whatever the income which is accrued, that is income which is accrued, where is it? 30,000 rupees to his wife. Please calculate and tell me how much is it going to be? 30,000 rupees to his wife, 30,000 multiplied by 19% per annum. So, how much is it going to be, people? 30,000 multiplied by 19%. The answer is already provided. 5,700. 5,700 here. And again, 20,000 rupees multiplied by 19% will get 3,800. And this 3,800 and 5,700 is provided the question. Clear? Gift from friends. Again, this is going to be considered as 30,000 multiplied by 4 friends. It is going to be 1,20,000. Comfortable? 1,20,000. Your GTI, gross total income, is 5,54,890. Deduction under section 80C is given. That is no deduction under chapter 6 is provided under section 115 BAC. What about the other income? Yes, absolutely, it's provided. The tax liability which you can see over here, that is tax on the total income. 3 lakh, this is under 115 BAC. So the basic exemption limit irrespective of the age would be 3 lakh for AY 24-25. So it is going to be minus, and whatever the answer you get, you will take it as 5% because the income which you have got is between the 3 lakh to 6 lakh point. So it is going to be 5% is the tax rate which is applicable. I'm assuming that you guys already know to calculate the tax liability. So I'm not going in very depth. 12,744. As this is less than 7 lakh rupees as per your rebate concept, so much is provided. If you don't know the tax liability computation and all, you can go and watch my revision series, revision classes, which is there as per my in my channel. You can go and watch that revision series of the basic concepts, and then you can come. So if you're comfortable, we'll move forward. Computation of total income and tax liability under normal provision. Whatever is the provision, whatever is the amount which you have got as per the default tax regime, that you are going to give the further effect as per the normal provision. That is 1,500 under section 10 subsection 32 you are going to get. So then whatever the answer you got is normal provision. Deduction under chapter 6A for PPF you have, that is 50,000. Whatever the answer you get, and you will add HEC to this, and the tax liability is 13,705. I hope it is